let's continue on our discussion of cash is king, and I want to plug this idea into another idea, which is increasing net investable income. Now, many of us might be familiar with the idea of increasing income. And if we were increasing income, we would do several of the things that we would normally think of, like, well, maybe you could get a raise, or get a higher paying job, or perhaps you could work some overtime, or maybe you could get a second job, or have your spouse go to work, or have your kids bring in some income, and that would be an additional income. So what's the difference between increasing income and increasing net investable income? Well, net investable income is the amount of your money that's coming into your personal economy that is able to be invested. Now, the key way to do this is to leverage not only your time and the time of your family members to increase your income, but to leverage your assets to create income for you. The number one way that you can increase your net investable income is by investing for cash flow. Not just for gains or growth of your money, but investing in a position where your assets are producing cash flow. That cash flow is added to your income, and therefore you have more income. Now, that's just an optimal way to increase your income. But what connects the idea with net investable income? Well, if you have a rule on your personal economy, I always save 25% of everything I bring in. That now is the rule that allows you to increase your net investable income, because now while your income is going up, 25% of an increased income is more money that is going to pay yourself first in this position where you can now use it. So you might be asking, well, I don't know how to invest in something that will increase my cash flow. Here is the beauty. You can save now whether or not you know what that specific cash flowing investment for you is. For you, it may be real estate, or it may not be. And so there are a lot of opportunities to increase cash flow, but you need the capital available for you to be able to purchase those opportunities and investments at the right time. So here's the key. Be saving cash that's liquid and available, just so that when you do now have that capital available and you've identified the right opportunity, you absolutely can get your hands on that money and use it. So pay yourself first, money that you keep in control in a place that you can access when there's the right opportunity to invest for cash flow. That will increase your income, which means more coming in. And if you've already set up and established the rule that you save a certain portion of your income, now when your income is higher, your savings is higher. You have more going into savings. And you're more quickly able to accumulate an amount of money in your savings that you've paid yourself first with that you now can use for cash flowing investments. It's a full circle process. Income coming in, going into assets that are paying yourself first, from that asset into a cash flowing asset. From the cash flowing asset, you have more income coming in, you're able to save more and put more back into cash flowing assets again. That is the position that will allow you then to increase cash flow from your assets that is greater than your expenses and get into a position where you can truly achieve financial freedom. Hi, this is Rachel. I hope you enjoyed this episode of Money Secrets. If you did, like this video, subscribe to our channel, and leave a comment below. I would like to invite you to get your free cash flow generator to help you start keeping more of your money. Come on over to marshallsinsurance.com/cashflowgenerator to sign up.